Hi, I'm Grant Hinchcliff. We're going to talk about IRAs. The IRA, or Individual Retirement Account, is like a lifelong partnership with the IRS. Ugh. And it can continue even when we pass. So we're going to cover 7 important IRA strategies that can free you from the IRS tax levy. And it's all good news. So you'll want to pay attention. The first thing I want to discuss is the stretch IRA. This is a very important concept because it enables you to pass more of your IRA on to your family or your loved ones upon your death. Typically with an IRA, what happens is when one passes away, the IRA can go to the spouse. But when the spouse passes away, all the taxes come due, which is called income tax blowout. So the IRS has done a good thing, and that is to allow you to stretch the IRA instead of having all those taxes due at one time. Now you can pass the IRA on to your children, and based on their mortality, they can continue to take money every year. And the bottom line for you and your family is maximization of your IRA. That means your family gets more instead of taking a lump sum distribution. Concept number 2 is called the IRA Inheritance Beneficiary Trust. When you have an IRA, upon death, you're going to pass it on to your children typically, or your grandkids. The problem with passing your IRA on to your children is protection. If your kids are sued, or they file for divorce, or file for bankruptcy, creditors are going to seize that IRA money. Or if you want to make sure that the outlaw in-laws, as I call them, don't get a hold of the IRA upon death, you need to use a very special trust that is referred to as the IRA Inheritance Beneficiary Trust. That is a very important concept. Strategy number 3 is called the Roth Conversion Strategy. This is very important because we can go from a taxable situation to a tax-free situation, and that's good news. Ask us about the dynamic strategy, bumping the bracket. Number 4, we call it the IRA Tax Smart Strategy to pay for long-term care. You might be aware that after the age of 65, over 70% of people will use convalescent homes or need skilled nursing facilities or custodial care. It could be as little as 30 days, but it could be many, many years. For example, did you know that the average Alzheimer's patient in a skilled nursing facility is there for an average of 8 years? This tax smart strategy is a great concept where you can use your IRA to actually pay for long-term care protection. This is a very, very important concept. Let me tell you what's critical about that. In 2006, the Pension Protection Act was passed, and there was a special provision that became effective in 2010. That enables you to utilize the interest in an annuity to pay for long-term care, and there are no taxes on that. This is another strategy where we're able to take an IRA and actually fund and pay for a long-term care protection option. Number 5 is called the QLAC. That stands for Qualified Longevity Annuity. And this could be very important for you as well. Because, as you may know, when you turn 70 and a half, you've got to start taking money out of your IRA. This new tax code stipulation allows you to defer a portion of your IRA for later on in life. Number 6, choosing the right distribution strategy between the ages of 59 and a half and 70 and a half is paramount to the long-term success of your IRA. We should take into consideration working your distribution strategy in conjunction with your income tax and longevity planning. You don't want to outlive your money or pay the IRS more than you need to. So let's review the 6 concepts: the stretch IRA, the IRA beneficiary trusts, IRA conversion strategy, IRA tax smart strategy, the qualified longevity annuity strategy, and making the right distribution strategy. So that's it on IRAs. If you found this interesting, take action. Call me for a no-cost, no-obligation consultation at 720-262-2188 or email me, grantctr@msn.com. Thanks for listening.